Well, hello everyone. It is Shooter. Hey, welcome to Primary Waves. Of course, at the end of our presentation, please do review our disclosures. Well, this week, I'm going to start off with the stocks to sell because there were a couple updates. I just want to highlight those a little bit. I think it's more of a management thing going into the holidays. So AT&T, we're going to put in our minor wave 2 around 1780, and then we should start our downtrend. We really need to get back above the 200-day and stay there for that to be invalidated. I'm pretty confident considering this is our primary wave 2, and we still have not completed our primary wave 3 according to the count. So you could sell some covered calls. I don't know that I would buy puts on AT&T because it tends to be moving a little bit slow to the downside, with the exception of this flush, which was the COVID flush. But it's a more of a meandering flush most of the time. We've got a few other decent pushes to the downside, but I would think this is more of a flat and drawn out. That's my thought. So max I would do is covered calls, or I would trim my position. Now, looking at Amazon, we pushed just a tad bit. Target one says $1.53. Then we should start heading a little bit lower. I'm fairly confident we get 50% back towards the trend support line, just with the look of this. Because this is a leading diagonal, at least the way it's mapping out now. That would need to change. And we really haven't, sort of rejected price here pretty aggressively. Not really a deep two, but the fact that we had an elongated A or an extended A in our ABC down sort of implies to me there's a little weakness right there. We're running into this whole resistance band up here, about 150. So I would think that we either come back and put 50% back of this leg and then keep going, or we get to 50% back and then we fail to get back above that 142 and then we reject lower. That's my thought. Looking at Berkshire Hathaway. Well, we've now gotten the second candle to the red side. So we never got above that 362.10, which is where I was like, hey, cut your covered calls. So if you still have the covered calls, I think you're good. The count has now extended lower. Target one is now down around 303. So it looks to me like that's going to break down below trend support. But here again, I'm being conservative because we have so much FOMO in the market. So the downside is really tough right now, at least the short side, just because, even Nvidia, as an example, came out of its push lower shallow compared to the count, quite shallow actually. And I had mentioned last week that maybe you want to unload puts if you have them or haven't already. And I actually didn't even include that in this week's article because it's sort of in no man's land and I didn't have conviction in either direction. So, but with that 303, I would at least sell more covered calls if you don't have any off of this too, because that pretty much is confirming your leg lower. So a lower high is something that I take with some conviction. Now, American Tower, we've had this for a while. It actually, a lot of the real estate companies did well. And, last week we had a breadth thrust indicator in financials. So, that's on the plus side. However, I don't know that American Tower is going to overcome the fact they have to roll over their debt next year and in 2025. I think most of it hits third quarter. So really, to invalidate this lower count, we need to get above the 200-day and stay there. So if you're still holding common shares, I guess it really would depend on whether I was in the red or not, whether I would sell covered calls or I would try and sell covered calls around break even if you're upside down. Because I do know that some of you were in over here in January 21 off this low, because we did have a primary wave and we alerted on that. And I'm positive somebody has it. So, but that's how I don't know that I would actually buy puts here because again, we got so much FOMO in the market. I'm being hesitant, really between now and the first of the year. I don't like trading this 2-week period, just simply because of the history of how weak it is and there's no volume. So you end up in this chop. So the most I might do is sell some covered calls just above the 200-day. All right, looking at Ford, I think year-end sales are going to be a big factor. They're really pushing the ads to get people into the dealerships. But to be honest with you, the dealerships I went to were ghost towns. Ghost towns. There was nobody there. I was the only guy there. I don't know. The only guy. And on top of that, I don't have anyone, and I'm not upper middle class or even really probably middle class in my subdivision. I'm probably a little lower than that just because of the price point of where my homes are in my neighborhood. But I don't recognize anybody having new cars in my neighborhood. 6, 8 months ago was the last new ones I've seen. Almost everybody has their same cars. So, that is usually a factor for me. Going into the holidays now, usually you start seeing quite a number of newer cars, and I have not seen that this year. So my thought is that $8 on Ford is probably viable. So, sell some cash secured puts once we get down there. And looking at KMI Kinder Morgan, I still think it breaks down here a little higher, maybe 1850, and then I think we do head to the downside. Now, overall, oil has gotten a little weaker, which is reflective in the shares. So now I want to take a look at Paramount here. I'm looking at maybe $18, and we head to the short side. So, if you're holding covered calls, I wouldn't do the puts simply because of the FOMO in the market right now going into the holiday season, that Santa rally. So I'm going to echo that the next couple of weeks. I don't think we should sell the short side. Now, looking at KKR, really a nice push. However, my 3 says 77, 78, and then we go back down to 64. That, I did not expect that push. Began it, didn't see it. We were at the breakout. We had the primary wave. It was very aggressive, but we're way overbought here. We're above our 30 RSI. We're not going to confirm here. So it's likely that we come back to 50 RSI, which is going to be at least down to $70. So, right now I wouldn't be chasing it long. I would probably be trimming up here. And if I was going to hold through this 4, which is going to be a little more heat than I would want to, I would sell some covered calls. All right. Pfizer, it's just a slow breathe. I don't even know that we get this bounce to this 4. It says so. We get to about 27.76. Then the count suggests that we get a bounce back to about 31. I don't think it's that high. I think it's going to be shallow. I think we're going to be lucky if we get 29.50 or 29.75, and then we continue to the low. And I think this extends lower than this. I think we get down towards the 20s, to be candid, just with how we've confirmed here on this low. So, this is a divergent low. We meet the criteria on the weekly of a confirmed low. So is this leg 1 or is that the bottom? Because that's usually how it plays out. Either it's the bottom or this is drive 1, then we got drive 2, and then we got drive 3. So, I tend to believe the count. However, the fact that we're running shallow on both sides, still on a lot of different symbols. In other words, the count says 4 here and we get here, and the 3 says here and we get here. As long as we keep running shallow on the counts, what it's telling me, there's not a lot of conviction from the buyers or the sellers to really keep it lower. So, all right, well, that's what I have as far as the sells. Let me go back and just run through the list of, going to go through Amentus. Really, nothing's changed here. Kirk spoke to the CEO, and there were some positive things on the outlook. So hopefully you guys entered before you got that news. I know he has that article out on that as well, so maybe you want to reference that. IIPR, I really like the way this is laying. I like the look, really, I do, because it's tight, it's high, it just hit the breakout line, back tested it, but it didn't flush, didn't go back below the 50-day. So we didn't even get 50% back. So I think it pokes its head above it either this week or Christmas week, which maybe next week. When is it? Forgive me. No, Christmas week is 2 weeks out. So, but I do think it gets up and out. Our intermediate wave 1's right at the 200-day at 136, which is a nice move right there along. I really like IIPR at this point. Now, Jimba, we back tested that little breakout a little bit. We printed a 368 when I ran this chart. So I still think we're going to get up and out. I'm going to go back to my old phrase, or the market's old phrase. The longer the base, the better the grace. I'm going to just leave it there. All right, NTR, we're still, building out this flat, but I still like it to the upside. It's done nothing wrong. Our next target is our intermediate wave 3 around 63. So, I would continue to scale from there, building a position on any dip, of course. Now, Intel, I think our 3 and our 4 is, and I think this will end up resetting. So I think we're going to put in our 5 on this next push, which might be a little shallow. So it might come in around 48, 47, somewhere around there, maybe even 46.50, then we put in our 4. Then that really tells us how much euphoria is in this market. Because, Intel is this slow, meandering grind higher. It's rough from a FOMO standpoint because it doesn't have a great following. Even though there's 186 million shares traded. The problem is it's such a tight range. It's very difficult to trade from an option standpoint. But nonetheless, this is the count. This is where we are, and that's how I think it plays out. All right, looking at Square, I wish we had another push. I wish that candle continued. It's, back test the breakout. We closed above it. So, maybe we head up towards, our 105, maybe the end of the first quarter, early second quarter next year. It's got a lot of work still to do because this to me, just where, if this is drive one and this is drive two, drive one, drive two, and we still could get a drive three. So, and realize I have ghost count down here at 1388 still. So this gets rejected. That's one thing I would watch if you're long. If it gets rejected here, we get below the 50-day, I would probably determine I wouldn't take 50% off yet until we break below our weekly trigger. The rules of the primary wave setup is you have the primary wave, you have the 90-minute trigger, the daily trigger, the weekly trigger, and then the breakout. So based on the breakout, which really occurred here, I don't know why I have that line up there, but the breakout really occurred here from our trigger. So you should be at a full position size. I'll have to go back and adjust that line. But, at that point, so we back test, break below the breakout, right? And we close on the weekly below the breakout. I would be trimming a little bit, but I would not cut to half until we close below the weekly trigger, which is 52.46. So, and at that point, the reason is because it's rejecting price. So if you moved on the 90-minute, you bought on the daily, you bought on the weekly, and you bought on the breakout, you should have a decent profit in Square right now if you took the trade that way. So we want to try and retain those gains until we get our back test off of the breakout, which ultimately, since this was our first trigger, and this was a ghost print because it rejected that, really until we get back above this breakout line, I have, no interest in chasing it myself just because of where the volume is, and I think the FOMO levels are really close to that 70. So taking a look at STAG, we're testing the breakout line. So maybe this week or next, we get up and out. I think worst case scenario, first of the year. SHOP, nice look above the breakout line, back tested it, closed above it. I think we look for continuation this week or next and into the new year. PLTR. Well, we got the breakout and we sort of rejected price. Now we're sort of determining where our base is here on this too. We'll see if that 17 holds. We have not closed below the weekly trigger. So, at this point, I wouldn't think about trimming until we close below that 1578. Then we might get rejected. Now, this is one we had a negative count on from all the way, this whole leg, and it didn't flip until I think it was 3 weeks ago or 2 weeks ago to the bullish side. So there's a possibility that it rejects it and goes lower. There is. Because usually those ghost prints, end up haunting it. Now, oil is really weak now. So we closed below the original primary wave 55.51, which is not far away, less than $1. I would trim half and wait and see what happens where we land, even though we have a bullish count here. Because my thought is 50-day, 200-day, 50% back puts us at about $52, $54 to the downside. And I'd rather scale back in down there. There's no reason for us to take that heat with the overall oil market being so weak and with China being so weak as far as volume and production. I really don't think oil gets higher until China recovers. Now looking at AST Space Mobile, we got above the breakout line and we had a follow-through candle last week. Woohoo! Okay, next target is 941 on the minor wave with a back test of 804. And that's the thought. Looking at Blackstone, nice push, just poked our head above the breakout line, and we rejected price there. So it's running into all this resistance right here. So we could back test, we could come down to like 105, and then maybe we start a leg up, even though the count says we're high and tight. So we'll have to see. Next 2 weeks will be critical. It'll tell us what's going to happen. So either we get follow through and we continue, like we open Monday, or by Tuesday, we turn around and get back above the breakout line, or we're going to see another red candle form. So we see another red candle forming. It's going to be to the downside. Now, those of you who have the $80 and $90 calls, that outcome is going to determine whether you hold into Christmas, so really it's next week. So, if we start to the downside Monday or Tuesday, I'd probably take profits and then wait until after Christmas and then look at scaling back in with 120 or 125. That would be my thought. All right, Fifth Third Bank. That breadth thrust indicator came in last week on financials. Maybe I'm wrong. Wouldn't be the first time I'm wrong. But still, my thesis is the retail office space is too big. There's too much money there that has to be resolved. Right now, there's not a resolution to that. So it's going to weigh on the banks at some point. It's casting. There's no way. They have to write off their losses at some point. They can't continue to carry. They're required to report it under the stock exchange rules. So, the unrealized losses will hit the P&L and it will bring down their tape, regardless of this FOMO. That's where I stand. But the count says we're going to 61, which is the case. I haven't looked at the books on Fifth Third Bank. So, from a macro micro standpoint, or even a fundamental standpoint, I don't know because I haven't looked. I'm a technical analyst. I'm going to do my work based on the counts, volume, profile, etc., and then I'm going to map it out according to what I see. And the rest of it's just noise to me. So, of course, on any chart that I present you, do your own homework. It's the best way. You're your own captain, so captains have to do some investigation on what they invested. All right. GNRC, Generac, we've been hunting this thing here above the 50-day. We might stay here still a little while. Might be mid first quarter, I think, before maybe we get up and out, but it's still constructive to me. Disney. Now, looks like we came in shallow on our one, and our two, I think, is done. Now, we do have a new primary wave setup down here with a 90-minute trigger at that 91.14. Closed above that, just above that. So we are heading towards our cycle wave 3 at 107 net. I still like it back to 50% back up at 140. So this, to me, is really going to be a position trade. It's just figuring out how to stay in it. Whether you're going to do common, whether you're going to sell cash secured puts, et cetera, et cetera. Digital Real Estate Trust. Man, this is another one that's doing well. I mean, it really is. Next target's 142. I'm going to leave it there. I think I've expressed my opinion on real estate. EPR, properties, nice base. What I like about this, I don't know if it's to like or not, but nice flat, held the flat, rejected price, came back, tried it again, rejected price, failed, went down to the 8-day held, came back right to the top, tested it again, a little higher, tested it again, then we got total price rejection. Now, see, to me, we don't have seller exhaustion on this candle. We really don't. None of these candles are huge sell. So, that was 50% of the candle, so maybe. But no extreme flush to the downside that just took out the sellers. So, but yet we came back, put in this new base. We really can't confirm, but we have a divergent low here, all right, versus that low, which is constructive to the upside. Then we stepped up and we're putting in this next leg. So now it's starting the stair step. And if you look back, I can't show you the tape because of in fact, it's in the published article, but it stepped all the way up over here. So step 1, step 2, maybe step 3, step 4, etc. So it looks very constructive to the upside. All right, Google. Okay, I just like this to the upside. I think we get some kind of news coming that gets us up and out because it's basically every dip's gotten bought and it really is honored. Even though it's overshot here. I'm looking at these off numbers where our lows were and, where we closed. And now we've skirted it, came right back down to this here. Notice that closed and went right to that. So this trend support is important on this chart. So as long as we scale it, but see visually, I have this history in the tape. It's extended. We have to chop down here, which is like what this looks. So, if we follow this, we're looking at a $1.94, later part next year, maybe fourth quarter, third quarter, if we're lucky. But once we get this breakout above this 149, this thing could move. It really could move to the upside. All we need is a catalyst to help us get there. So, all right, now looking at Apple, about ready to break out again here. I really like a shot at 200. Now, I haven't got filled on my orders yet. Probably won't with the look of that candle unless we gap down for some reason. I haven't decided if I'm going to chase it at the breakout yet or not. I'm undecided. I don't like trading these last 2 weeks of the year. Be very candid. I don't like trading after Thanksgiving just because the volume's so screwed up. You end up in this chop and it goes in the opposite direction of where it should go because too many people are missing MIA. Because, honestly, the people who are the traders, they're making enough money. They can take the whole month off. And they know it's going to be better trading the second week of January. So there's a lot of them that don't come back until the second week of January. That's it. They're on vacation. The rest of the time, they're buried in their charts and they're trading and they can't leave. The only time they get off is when there's a stock exchange holiday. You literally can't call in sick. But hey, that's what it is. So I like Google to the upside going into first next year. And Microsoft I'm going to use my uber strong phrase. It really is here. Really is. Totally faked me out down here. The one thing about the tape and the counts that I do, even if I think the count's going to go lower, and it should go lower, if it comes in shallow, there's a point where we know it's going to change. And basically, I wait for my tools to tell me, our direction has changed, very much like Nvidia, which, by the way, I didn't include it in this week's because it completely reversed. It was shallow of our lower count substantially, and it blew a bullish count, but yet it wasn't constructive enough to the upside for me to split bullish and put it in the primary waves this week because I didn't want anybody chasing it. Because it's just, that's where it was. But Microsoft, I still think this 3 can push up to 450. I still think it can. So if this euphoria, realize we now, a lot of things are lining up where there's going to be a lot of euphoria. So the tone of what the Fed takes in our next meeting is going to be very important to the upside for the Fed and where interest rates are. And, the decline in residential interest rates over the last 2 weeks is very positive. It implies the market believes the Fed is probably going to react as early as May and start cutting rates. That's my interpretation of that. I don't think we see it in the first quarter. I think we see it in the second, unless there's some data that forces them to make that decision. Basically, they can be complacent here. And the longer that continues, the more FOMO is going to come into this market because everybody is going to be building on that thesis of second quarter 2024. Fed's going to cut rates, and we're going to have this euphoric boom in the market. All right. Now let's, I wanted to jump over I wanted to go over crypto and go off of what was actually in primary waves because this is not in primary spec. This is our daily count. So we're looking for us to wan a little bit, maybe down to 42,160. And then we put in a 40, basically a little lower than our high. So our high is in right now until we put in our 4 at about 41. On big, right? So this is going to build out to a flat the way it looks like. Now, historically, if we go back in our counts, we push and we give most of it back. We push and we give some of it back. So the outcome probably is we pushed, but we didn't give it back. So are we going to give it back here? Now our lower trend support channel, and I'm just going to extend this out. The purpose is and throw a alert there so you can visually see it at 36630. So we closed below that. We're going back to test this January 21 support 32. It's a viable outcome here because this is very euphoric. However, I was looking at the spot ETF applications, and GBTC's application is January 1, and there's scattered dates out really till January 15. Now, the ideology that we're going to have all 12 applications approved at once, I don't think that's going to be the case. I don't know that GBTC is going to be the first one, because if I was the Fed, I wouldn't approve that one because they took me to court. I would wait until my hand got slapped. So it would probably be another one that I would approve because just understanding the psychology of running that kind of an office is, you sort of want to keep your people in line. And unfortunately, many government agencies do that. So that's my thought. I've also posted a couple thoughts on the SEC's postings. I think it was BlackRock's updated posting where they had to mention that there's the potential that the SEC would declare Bitcoin a security. And that's very challenging in this market, which is one reason I want to spend a second and address that, because I think we're good. Because here's what I think happens in the overall picture. And I posted this in chat. Is that the Fed is scared, or the U.S. government is afraid of a decentralized ledger because their job becomes obsolete. Literally, we don't need a tax agent anymore. The blockchain can collect our tax, okay? Literally, from a fraud standpoint, the government can't take it, so the criminals can't take it either. And the few that get to it is because they've stolen somebody's passphrase or whatever. So that's the only crime that occurs. So usually somebody knows when their stuff's been stolen, yet they can still track it. Everything is on that decentralized ledger. So they know where it went. They know exactly what country. They know exactly what IP address. So they have something to track. So that in itself is, concerning for the government. I can see why they're concerned, because when they lose control, they can't shut people down. And that's, and basically fraud and criminality is a big issue in any currency. The amount of money that's stolen from credit cards and debit cards in America is sick. I mean, we just have insurance that covers it. If not, all of us would have taken losses. Heck, my son, somebody tried to run up $1 million on his card. It's just, some of the stuff is crazy. But, my thinking is the Fed doesn't really get concerned with Bitcoin until we get to a certain mass, certain size, where they can't manage it. And I think that's about 150,000 a Bitcoin. just in my math in my mind. So I think we're good on Bitcoin until 100K. But I could be wrong. I mean, they could come out January 1st and label Bitcoin as security. And then we're going to lose 50% in value. So whatever money any of us have in Bitcoin, I would just weigh the risk versus the reward. And the reward is substantial here to the upside. But at the same time, I don't know that I would be doubling my position here. I think I would scale back and use a little more leverage, very much like what I've done. I pulled back on GBTC, and I went to micro Bitcoin futures. And the reason I did is because I could scale in and scale out in smaller lots as I can keep buying the dips. So, but at the same time, I also could control the timeline, and there's not as much decay, but there's substantial risk. I can lose more money than I've invested. So if a crash comes, I'm going to get hit. I'm not recommending that anybody follow me there unless you have the moat to do it, and you're willing to take those losses. That's just, again, you're your own captain, and you need to decide here. But I want to make sure you understand my thinking. So once we get above 100K, at that point, I'm going to suggest that you hedge, or I'm going to hedge, all right? With some way out of the money, like a 50% loss, like 20K, right? Puts short term, and I'll keep rolling. That'll be my thought. Now, of course, that's going to eat away to the upside. So, but at the same time, I'm not going to be comfortable having that much money in Bitcoin, unless I have that coverage with that tone in the market, because that language came from somewhere. In other words, the disclosures weren't satisfied by the SEC. And they said, well, wait a second, you need to put this in. Well, where the heck did that language come from? And the reason that language came from somewhere is because somebody's talking about labeling Bitcoin as security, whether it be the SEC or government regulation or whatever. We don't know because that hasn't been disclosed to us. So we just want to be a little cautious. All right, now there's a number of names I want to address. I'm going to go to GBTC, just run through it. Right now, I've got 36.85 with a back test of maybe 35.21. Then we head towards our 38, building out a very similar flat to Bitcoin. Ethereum, maybe a back test down to 2207. Then we head towards 25. Then we get another back test. And then ultimately we land around that 277. Now, I wanted to show some additional charts. I wanted to look at Hive. It's not done as well as Bitfarms, but we're up to 420. It's not quite 25. I think it was 26% actually. From where I've scaled. I've been scaling since here, and I was even buying here, and et cetera. So looking at Bitfarms, nice move, just stellar. This is like a rocket ship here. So we're looking for our 3 around 271 with a back test maybe to 236, and then we head towards 381. Now that's our intermediate wave free. Our C is up here at 952. This is like playing out. It's broke above. It's above. Our next resistance is not up until, what is that? 440. So man, that 50% back is totally viable here. So it's still minimum a double from where we are now. Also wanted to throw in Marathon because I know a couple of you traded it. Marathon looks like maybe 23.93. Then we head to the short side. Now I wanted to pop up Iris Energy, because this was Kirk's baby. A looks to me like it's in. We get a back test, maybe 412. Then we head for our 662. We are in an intermediate wave downtrend though. So that looks to me like it breaks down. However, notice we have a breakout line overhead here. So it breaks out, that count could flip north, confirmed, divergent high. So there's a very good possibility we do put in a higher high here, according to the way the chart looks. All right. So looking at MicroStrategies, MSTR, and I didn't call it Monster. All right, we're well above the breakup. Nice follow through. Oh, look at this thing. We don't have any resistance. Real resistance. Where's the resistance? We've got our until roughly $620. See a little bit. Now we got a real sell on this. Look at that sell. Look at how the breadth of that close on that candle is. Look at that. That's buyer exhaustion. That's buyer exhaustion. So right here at this off number, wherever that was, 1,030 is really where strong resistance is. So I wouldn't be surprised if we rejected it lower. But note, this is also in a counter trend. So, all right, I wanted to take a look at coin. And Roscoe's going to give us some noise here for a second. So we'll just have to deal with that. That's enough. All right, so coin, above the breakout line, looking for this minor wave 3 around 155. Then we back test to about 136. Then I think we launch up towards about 250 plus. So, I do like this to the upside here. I think coin has a good shot. And not only that, flow's been heavy. And then I want to take a look at Riot, because I know a number of people had asked about Riot. Maybe this intermediate wave 2 at 16 and then it gets rejected. So notice how we have a slant with some of the miners, specifically that may be turning lower, and then other ones are much more positive, which is one of the reasons I picked Hive and Bitfarms, was because they had positive counts to the upside regardless of what the market. So once the catalyst of the market got behind those stocks, they pretty much were guaranteed to go. You won't hear me say that very often, because really nothing's guaranteed, but I like to feel like it's guaranteed. So that's all right. Now, XRP, there was an article that somebody said it went to 80 cents. So I was checking to see whether I had the right price or not. And I have the right price. So it didn't go to 80 cents. However, that doesn't mean it won't. So, next target is about $1.46 on this. Very constructive. I'm really wishing I didn't buy this low. I really did. Yeah. I started scaling in right about it. So that's my thought. I think I got 63.58 is my average now. So we're continuing to scale in. So that's what we have for this week, folks. Great trading. Until next time. And this is just a sample of what we do. So hopefully encourage you to join us. That's what we have, folks. Great trading. Until next time.